Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin. I'm really looking forward to this session. We've got a lot of learning points that are really helpful for us across a whole number of different aspects. And before we get going, I just want to welcome people in, just as people are coming in and signing on. Hi, Caroline, Dieppe, welcome back, guys. Joseph, Van, Seppo, Bazabakorn, great to have you on board. Looking forward to this session. This is going to be a really helpful session. There's a lot that's going on at the moment, and we're going to be really understanding a few key things like, buying the rumor, selling the fact. That's sort of playing out as we speak now. I'll be speaking about that, and in particular, we have some really big Brexit headlines which are breaking as we're on this trading workshop. So looking forward to this session a lot. Before I begin, just explaining that any sort of opinions of trading levels, entries, exits, I'll be speaking a lot about, the technical side of trading, potential places to enter, where to put stops, but none of that is designed to be a trading signal service. It's not a trading advice. The whole point of these workshops is all about educating traders so that people can make their own decisions. So my job is to help people see what are the, what does a professional how does a professional trader look at the market? What kind of decisions are they making? What technical decisions are they making? And then the idea is that you go ahead and you take those skills and develop them for yourself over time. So that's just to make that clear before we get going. I'm going to outline the session ahead. We've got a special topic today. We'd like to have a special topic on these workshops just to add a little bit of value. And this one is a really good one. Again, very relevant today. We've got the FTSE 100 falling currently over 1%. It's fallen. As I'm looking at now, it's 1.06%. So why is it that when the FTSE 100 falls, Sterling rises and vice versa? You would have thought, okay, well, why doesn't the equity market, FTSE 100 and the pound move in tandem? Why do they seem to move in opposite directions? That's the special topic you were looking at. It's an easy answer when you know why, and it will just aid and help for your understanding. The handout for the session. Now, the handout for the session, if you go to your GoToWebinar control panel, there's a little grey arrow where it says handouts. So if you just click on that handouts, you can see a workshop guide for 26th of Feb. If you just click open on that workshop guide, you should have something like this should appear, and you can see Level Up with HYCM free online trading workshop. And we have a handout that we'll be referring to during the course of the session. As I mentioned a number of times, I have a kind of a template for trading that I use. And this template is really second nature for me now. But when you're starting and beginning to trade, it really helps to kind of put these templates down. And I designed this sheet to be one side because it needed to be practical, something that you could have by your trading desk. And its idea is to remind you what kind of things to be looking at each time you come to the market. So we look back. So in other words, if you've just joined me for these workshops for the first time, the first thing we do before we even start entering trades, looking at our charts, we look back to identify recent sentiment by reading up on the last two sessions of market activity. All sentiment means is a mood. You think of the mood like a person has a mood, the market has a mood. And what we're trying to do is we're trying to identify key market moods. We then went to summarize that sentiment in a sentence or two. And really what we're trying to say is, what's the dominant mood? What's the mood that's really taking control? What mood is the market focused in on? Now, today's really helpful because in today we have one major mood that the market is focused on, and we'll be exploring that as we go through the session. Then we look forward. After we've looked back, we must look forward. What are we heading into? What key events are coming ahead? The key reason for looking forward is that sometimes the market pauses before major events. Okay, the market will just pause and wait and see what happens. So sometimes if there's a big event that's happening, we need to know about it. there is some quite big events happening as it happens today as well. So it's been really helpful for us to see that the market is in a kind of a wait and see mode. And there, we've got the anticipated event coming up. Again, we will discuss that. Then we look at the charts. It's only when we look back and look forward that we look at the charts. And by now we should have had developed a bias for certain currencies. In other words, some currencies are better to trade than others at certain times. Sometimes it's appropriate to really look for a long or a short on certain currencies. And that's what we would have discovered by looking at sentiment and looking forward. So when we've done that, we then get into the technical aspect of trading, okay? And that's when we'll look at some technical things, moving averages, pivot points, and sensible places to enter. Of course, looking at your risk, very important aspect. Are you using your leverage correctly? This is obviously that leverage is the ability to trade with money that you don't actually have in your account. In a sense, it's like borrowed money. So I always recommend traders, particularly when they're beginning, is don't use leverage. So allow your account, your position size to match your account size. So in other words, if you have a 10,000 US dollar account, then use a 10,000 value of trading volume. So in other words, you would use 0.10 mini lots. That's the idea, okay? So I recommend not using leverage. And I myself, as I work for my fund, I only use a maximum of 1 to 2 leverage. So I generally don't use leverage, and I quite often use less than my full leverage. Then finally, we look at the outcome of our trade. This is when we think, how we follow the correct process, how has the trade, what's the outcome of the trade, how do I go about sort of analyzing that and making the best. So that's the handout. That is for you to use week by week, and we'll be going through it together now. We'll be going through an example, imagining, though we've come to our desk now, just at the start before the US session, and we want to know what's going on. So that's exactly what we're going to be doing. So you want to refer to that during our time together. Also to say that I now have an email address with HYCM. I'm going to be working in partnership with HYCM as of the 1st of March. So this is an exciting time for me. And if you want to, I just make sure this is, yeah. If you want to make sure that there's any topics you want covered, you can email them to me directly at this email address. So that email address comes directly to me, and I'll be able to look through the topics. And if there's a topic there that I think, yeah, that's a really good topic that will be helpful for a number of people, send it to me, and we can look at doing that in the workshop, and maybe doing some articles. We could look at different ways of covering that. So first thing we should do is turn to our handouts. So if you turn to your handouts, it should look like this here, and you want to open it up. And remember through it all that the idea of this handout is it's usable. It's week in, week out. It's like many things in life. You want to do them consistently. You want to do them dependently, reliably, so you can repeat the same pattern over and over again. Over a while, you'll begin to see how the market does move in very predictable ways, and the market's direction can be, you can't get it right all the time, but you can start to see a clear edge over time as you learn to look at and read the market from a fundamental perspective, which is really what the outline of this setup is. Okay, so the first thing we want to do is look back, and we know that we want to identify recent sentiment by reading up on the last 2 sessions of market activity and identify key market sentiment. So without further ado, we will go on and we will do that. So the first thing for us to look at is the market is in a very delicately poised situation regarding the outcome of the US-China trade war. Now, the US and the China trade together, between them, are responsible for over 40% of the world's GDP. So if the US and China manage to strike up a trade deal, then that will be a very, very good news for the entire global economy. So understandably, with the two world's biggest superpowers locked in a conversation about trade tariffs, the outcome of those trade tariffs are going to be absolutely key. Okay, it's going to be absolutely key, and the tariff hikes on the March of 1st are delayed. Now, what was going to happen here is that the US was going to put 25% of tariffs onto the Chinese imports. And that would have been a very significant blow to that US-China trade war. But those have been delayed. And President Trump is saying that a deal is very, very close. So originally, the market rallied quite strongly on Monday. The Hang Seng Index, which is the Chinese equity index, rallied over 5%. And this was all about optimism that the US-China trade deal is going to be sorted. Okay. Now, last night, overnight, those initial gains have tapered off. So the Hang Seng and the Shanghai index are both down 0.65 and 0.67% respectively. And the reason that there's a slight pause is President Trump really wants a trade deal to be done because he's worked out that in the end of December last year, when the S&P 500 sold off very heavily. Let me just show you that on the chart so you can see what happened. I'll explain, and it'll make sense to you. SP. You can see in December 2018, see this heavy sell-off of the SP 500. Okay, now that was all happening because the market was very concerned that President Trump was going to launch into an all-out trade war against China. And what President Trump didn't realize is that when he was being really combative to China, the market was really worried that this was going to be really bad news for the global economy, bad news for US companies. And so the S&P 500 fell heavily. Okay. Now that was a lesson that Trump's learned, and he's learned that if he's too negative about the US-China trade deal, it's going to result in a negative result for the S&P 500. So he wants to keep saying there's going to be a deal, it's going to be a good deal. And if you think about it, his rhetoric's been quite different with China than it has when he was doing the NAFTA deal, quite different with the EU and European car imports into US. So he's having to play a much more gentle game, okay? A much more gentle game altogether. So the key thing here is there's still no detail, okay? And that is why the market's pausing, because it kind of rallied on the optimism of the deal, but now, okay, so let's have a look at the detail. And the detail isn't forthcoming, it's not coming out. So that's really a key issue here with the US-China trade war. And the market's kind of in a pause and wait and see mode. Okay, so that's a really, it's a pivotal point. What's going to happen here is going to set the near-term market direction. And in these kind of situations, when you're getting really close to a deal either being delayed or done or not done, sometimes the best thing is just to pause and stay out of the market. Okay, not only do we have this deal, we also have Brexit and negotiations going on, which are really at a critical point. So you've got quite a few really big market moving events. So a really fragile time for the market. Okay, now yesterday, President Trump really affected the US oil markets, and he used a tweet. Amazing how much impact one tweet can have, where he says, oil prices are getting too high. OPEC, please relax and take it easy. World cannot take a price hike. Fragile. Okay, so that was a tweet that came out from Donald Trump, and technically this is the US oil chart on the weekly, and so on the daily chart, and you can see here technically that price had moved up into the 200 exponential moving average. Okay, so price was at a very technical critical point. At the same time, Donald Trump is criticizing OPEC, and he has moved the oil markets before. He did it before in November, and it was November the 12th here. You see this mark here. Donald Trump had another tweet against, OPEC, and he was really concerned. He's saying, why are oil prices so high when there's such an oversupply of oil? And that led to, a heavy fall off. So what was happening is, while that was all going on, I was now I'd taken a long position in oil from this point here, and I was trying to play for the 60 level. But this is a good lesson, because you can see here this is my entry here on the daily chart, and that's my exit there. And this is just a good lesson. Sometimes when you see like a fundamental shift come out in the news, oh, this is the time. This is clearly the time for me to exit the trade. Now, I was long oil, heading for the 60 level. You can see that we're up against that 200 exponential moving average, key technical point. And then when I saw this tweet from Trump, I thought, no, that's it. This is the time to exit the trade. I'll take my profit, and I can always look at entering again lower down against the price fell and moved to the 100 exponential moving average, and I got the 50 exponential moving average below that. So that was the effect that Donald Trump's tweet had, just one tweet, and that shows the impact of Donald Trump as a president. I mean, it's interesting that of all the world leaders there've been, I don't think there's been a world leader who's been able to affect the markets as quickly and as rapidly as Donald Trump can with his Twitter feed. It's really quite striking. So something you have to be aware of. And if you're not following Donald Trump on Twitter and you're not checking the news, you need to follow Donald Trump in Twitter, so you can get those instant up-to-date releases of his Twitter account. That can be really, really helpful, especially at times. And that was a good example, and a good example of how it helped trade management. You see, long and realizing, okay, this is the time to exit. And clearly that was an excellent time to exit that trade and lock in as much profit as possible. Okay, Brexit latest. Now, this was very interesting, and we've been really rolling on Brexit ever since this headline came out yesterday. So basically, March the 12th, UK Parliament is due to get a final vote on Brexit. Now, that's been updated recently. We'll come to it in a minute, but this was happening in the US session. And the whole thing is the EU were mooting a 2021 extension. They saw a 3-month extension of being too short for Brexit. So they were thinking, well, what about a 2021 extension date? And the concern with this is that if the extension date gets too long, then Brexit may not happen, because just because you make something, delay something, it doesn't necessarily mean that the delay is going to be helpful. Sometimes you're going to have the same problem after the delay as you did before the delay. And the problems with Brexit and the EU have been intractable. So it's just interesting that the EU wants an extension, and you could see politically that that's looking for an effective no withdrawal Brexit. So that came out yesterday, and then we had in the US session, we had Jeremy Corbyn saying that so Corbyn appears to support a second referendum on Brexit in a big shift for the opposition leader. At the same time, he said he will back an amendment to take a no-deal Brexit off the table. Now, this was a shift. Okay, now this was a shift because Jeremy Corbyn, the second referendum is basically going back to the British people and saying, do you really want to leave Europe? And the market would see this as a pound positive development, because it means there's less chance of a Brexit deal happening. So what Jeremy Corbyn really introduced back into the political landscape is making it much harder for a no-deal Brexit to occur. Okay, Jeremy Corbyn's trying to make himself more popular to the people, trying to maybe look at a general election, spurring a no vote confidence in the Conservative Party if a Brexit deal doesn't get organised. So all these kind of factors were at play, and I was just at my desk at the time. I saw it come up on the Reuters terminal, and I entered a pound long here at this level, which is about just over 1.3070, and I held that position and I just took it off before my session today at 131.89, so about 110 point move. Now that was just like very straightforward points really, because I moved my stop to break even almost instantly on the release. I knew that if this is going to go, it's going to fly, and yeah, it sort of it flew quite quickly and was bid very strongly, and that was, you know, key. And that bid on the pound went through the whole Asian session. Okay, so major news was that Theresa May will delay Brexit. That came in the Asian session. Okay, so Jeremy Corbyn's news was here in the US session, and in the Asian session it reported that Theresa May was going to delay Brexit. Okay, so you can see that there's that gap in price as the price has just bid very strongly on that news. Okay, so this was a very clear buy the rumor trade. Okay, because she was having her meeting at 12:30 GMT, you know, GMT time. This is happening about 3 a.m. GMT time. So it means there was like about, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 12 hours before Theresa May spoke to Parliament. So here's a question for the regulars. Okay, let's just, so for the regulars, this is a workshop, so let's have a look. Okay, now if you come to your desk at, say, you come to your desk at you know, 7, 8 a.m. GMT time, which is around this time here. Okay, and as you come to your desk, you've seen here 7 a.m. You've seen price at this point. You've also seen the news that there's a lot of negative sentiment concerning Theresa May. Not negative sentiment, there's bullish sentiment for the pound concerning Theresa May, and you want to go long the pound. You want to go long against the pound, the US dollar. You know, the US dollar is a wait and see mode. If that was the case, how would you define and enter this trade? How would be a sensible way to play this trade? This is for some of you regular guys who come. How might you have played this? Yeah, should be Van. Yeah, you guys. If you want to put in the questions, how might you have played this? This is on the 1 hour chart. We've got the 100, 200 exponential moving average. I was looking at this trade myself this morning. I didn't take it because I was already in the trade, but it's a trade I was looking at today. What might you have done? Where would be a sensible place to enter? If you were coming at 7 a.m., you saw there's a lot of bullish pound sentiment. You know that Theresa May has said that she might delay Brexit. You know that's going to be bullish for the pound, at least in the short term. Where would you have entered the trade? Okay, you're all very quiet, guys. Yeah, do you want to have a go? Where would have been a place to enter? Where would you put your stop? Where would you have had a target? Okay. Well, a very sensible place to have entered here would have been just to use the simple pivot points. You can see that price moved above this resistance 1 pivot point on the 1 hour chart. You can see that price moved above it here. So you could easily have entered along on the break of this candle. You could have a stop below the low of that candle, and you could have played along into the R2 pivot point just above. And you can see that's exactly where price went. It went to that R2 pivot point. Traders took profit, and price retraced back from there, and is now moving back up to that level, and it remains to be seen what's going to be happening. But this was a very clear trade because you know, this, you could buy the rumor. This is called buying the rumor. Okay, so the rumor through the Asian session is that Theresa May is going to delay Brexit. We know that's Crown positive. Here's the delay Brexit candle. Okay, that was the Jeremy Corbyn candle. That's the delayed Brexit candle. Then we can see we're moving into this resistance line. We break over the top. So a very simple place is to trade long, stops just below the lows, and you can play up into the resistance 2 level. A nice, simple, straightforward trade. And you could have had the strong currency of the pound against the weak currency of the US dollar. People are waiting for the Federal Reserve to speak. Jerome Powell is waiting to speak to Congress, quite neutral. Would have been a very potentially simple trade to have made. Okay, so that's just a good example for us. Now moving on. Yeah, okay. Yeah, and then this was the fall in the oil through Donald Trump's tweets. Yeah, we've seen the extension, Jeremy Corbyn. We saw Theresa May with the rumour. And now we had the London session. We had Bank of England's Carney speaking. We know this was projected to happen. Again, we knew that this wasn't necessarily going to be market moving because Brexit is taking all the focus. But yet, still, you want to have an idea of what's happening with the UK economy, so that when Brexit, recedes from the background, all of a sudden the market's going to refocus on the data. And Mark Carney saying the firming of wages is a significant development. That's good news for the UK economy. The wage growth is consistent with tight job market, but acknowledges weak productivity growth. And he also gave the warning that Brexit uncertainty is to persist beyond the Brexit date. Okay, because a lot of people have been realizing, okay, well, because Brexit's going to happen, then UK businesses and foreign businesses aren't investing in the UK until Brexit is sorted. And what Mark Carney is saying, actually, the Brexit uncertainty is likely to continue beyond the Brexit date, because the uncertainty is still going to be, okay, well, what kind of deal has Britain got? How does this deal work out? What does this mean for us as a company? So he's just wanting to warn the market to say that actually Brexit uncertainty is going to go beyond the Brexit date being sorted. Okay, so that's a key thing. The other key thing is that in 2018, business investment slumped by 3.7%. That's minus 3.7%. So business investment is down in the UK. Okay. Oh, hey guys. Hi, Chibivan. Yeah, I've just seen. Haha, yeah. Okay, Chib. Yeah, okay, good effort, guys. I think you've heard my answer now, but I appreciate you guys having an effort at that. So good effort. Okay, yeah. So the key thing here that Bank of England is saying is that the business investment has slumped by minus 3.7%, and that's kind of different to what's going on in the rest of the world. So business investment slumping in the UK is almost solely going to be down to Brexit. Okay, that is the reason for the business investment slump. Okay, so that was the Bank of England speaking, Mark Carney. Then, while we were online in the London session, we had, just before we came on, there was a whole flurry of things that happened. This was, this come 12:30 GMT time. Prime Minister Theresa May is speaking, and she said, "This is what she said." This is on my Reuters terminal. I didn't have time to jot all this down, so I just quickly put it up so you didn't miss it, because it's a good learning point for you all. Theresa May will make 3 further commitments today. She can meaningful vote by March the 12th. If that falls, there's going to be a vote on the 13th on whether Commons would support leaving with no deal. Third, if MPs reject no deal, there will be a vote on extending. Okay, so there's the 3 votes. March the 12th is the meaningful vote. If that fails, there'll be a vote on the 13th on whether the Commons would support leaving without a deal. And then if that vote is rejected, then the MPs will vote on extending Article 50 and extending Brexit. Okay, so this is where you have to start putting things together, okay? Because what we're saying is Okay, it's now meaning that Theresa May seems to be accepting that a delay in Brexit seems more likely. Now that that delay in Brexit seems more likely, what is the end result of a delayed Brexit going to be? It's going to simply be more uncertainty. And as the Bank of England says, Mark Carney says that uncertainty is weighing on UK investment. So the more uncertainty, the more it carries on, the less good news it is for the pound. Okay. So although the initial response to the pound has been a buy the rumor, has been a buy, as the market digests that, it could easily turn into a bearish sentiment for the pound. So that's the clever balance that's going on at the moment. Looking at the pound at the moment, we can look at, and I'll explain how I've tried to sort of take that balanced view of the pound in the trading situation. Okay, so as I've explained why I got long, I explained the reasons, and then as price moved into the 200 exponential moving average, that was the key place to take profit. Okay, as many of you guys know, technical places are good places to enter and they're good places to exit. So there was always a risk, wasn't there, when Theresa May spoke, that the rally in the pound didn't carry on. The market always likes to know what's happening. Okay, what's happening next? So when an event happens, you often see the opposite reaction of what you'd expect. Okay, so this was, so here we are, 1:30. So you look at 12:30. Here's Theresa May speaking. Okay, now you think a delay in Brexit, you think would be positive news, right? Wouldn't you? You expect the pound to appreciate. So you think, oh, but hang on, the pound has fallen. Why has the pound fallen? Now remember that market participants are always looking for what's happening next. So market participants, and you can see from the trade that I showed you, were buying from, well, I bought from this level, but I think a lot of people buying purely on this Brexit sentiment were buying around here. Okay, 1.31. Some people might have gotten at the very top, 1.340, 1.3, and taking profit at those technical levels made sense. Okay, so you've heard of the old expression, buy the rumor, sell the fact. Well, that's what I did today. So I bought into this, and then when Theresa May came up with that, with the the things that she said, I thought, well, okay, does that really is that really fantastic news? No, not necessarily. And so I sold in at 1.3210, just above 3211, 3210, something like that. And I just brought my stop to break even, and I'm trying to see if I can play down for the lows and see if I can take a little cheeky little bounce off that 200 exponential moving average. And that is a buy the rumor, sell the fact kind of trade, because I bought the rumor and then you sell the fact. It's what professional traders do all the time. And what you need to get into the habit of thinking is, what's going to happen next? What's the market expecting to happen? And what's the market focused on going into it? The event itself will often have the opposite direction what you expect, and that's all only because the market is moving before those events happen. Now, I may get moved and stopped out here, but I got in nice and early, so I'm quite happy with my sell. I'll just leave that and come back and see what's happened with that, because we have some more unexpected data coming out. Now, today's an interesting day because it's really unusual. And then this was the headlines that were coming out, all from Theresa May. So we'll have further discussions with Barnier. I know what Parliament needs to support exit deal. We will bring forward proposals to protect and enhance workers' right. I know people are worried time is running out. We will hold a second meaningful vote by March the 12th. It's just going through a lot of things, nothing particularly new apart from what we've already discussed here, these three things. So it's a meaningful vote on March the 12th. Failing that, there'll be a vote on the 13th where the Commons would support leaving with no deal. And then third, if MPs reject leaving without a deal, there'll be a vote on extending Article 50. So the way it's going towards an extension. That's where Brexit is heading, and it's just, it's just kicking the phrase is kicking the can down the road. Doesn't particularly change anything. So, okay, here's a question for you. Going into the end of the London session, we've now just entered the US session, by the way. So going into the start of the US session, which currency would we expect to be the strongest? Which currency would we expect to be the strongest going into the London session? Because remember, we always want to trade the strong currency. Yes, as you say, you got it right. Well done. I'll just give anyone folks another moment. We've got one answer and it's correct. Which currency would we expect to be the strong currency going into the US session? Go on, guys. Okay, Adesai, you got it exactly right. It's the pound, of course. That's what we'd expect to be the strong currency going into the session, because the pound was rallying on the hope that the Brexit date would be extended. And that's exactly what we found. So against the US dollar, the strongest currency was the pound, up nearly 0.89% against the US dollar. And the yen was strong as well. Not strong, a little bit of strength from the yen. But see, the main currency, the main moving currency going into the London session was the pound. Okay, so all of a sudden we have our strong currency pair. Now, this was also the strong currency pair going in to the London session at the start, and that strength has carried on. And we're not surprised, are we? Because it's the we're not surprised because that was the currency being bought in anticipation of an extended Article 50 for the UK. So it's not a surprise for us. And that's why we saw that pound strength going in. But obviously, why do we not want to buy the pound now? Why, even though the pound has been a strong currency, why do we not want to buy the pound? Well, the simple answer is because it's a buy the rumor, sell the fact kind of trade. Okay, we need to have some more catalyst, another catalyst to buy the pound again. It needs to be something. There needs to be another little shift. Maybe a clarification of what Theresa May has said. It could be some new news. It could be the fact that this is seen as strong for the pound, and there's a big reaction. A big market participant makes a move. We need something to change what's already happened, because at the moment we've heard the Bank of England is simply saying, well, things aren't great for Britain. The business investment is down. Brexit uncertainty is going to carry on past the Brexit date. This isn't necessarily going to solve all Britain's problems. So any strength in the pound is going to be sold, because extending Article 50 just kicks the can down the road, extends the problems, makes more difficulty for the pound. So that is why we don't want to buy the pound now, even though it's the strongest currency going into the session. It's all to do with context. It's always to do with what's actually happening at the time. So now we look forward, okay? We've seen the pound strong. We know why the pound is strong. We know the reasons why we don't want to jump in and buy the pound. And we look forward. What else is coming up? Okay, so we've had the inflation report hearings. We've also got the Fed Chair Powell testifying. This is a significant event, and the market is in a kind of pause. Okay, the market is like very cautious at the moment, because it's kind of like, if there was a theme for today's market, it's caution, it's pause, it's wait and see. That's kind of the situation the market's in. The rally in China with the Hang Seng Index on the prospect of a US-China trade deal being resolved has just held back. It's like a pause. Okay, so now Jerome Powell is speaking, and he's speaking today. And the question is, when he speaks, What is Jerome Powell going to say? Because he's going to set the tone for the dollar going in, okay? And what he's likely to say, he's going to speak to Congress for 2 days, okay? And what he's likely to say is likely that he's going to stick to his normal themes, okay? So it's likely that he says, look, the Federal Reserve is patient on interest rates further. We're awaiting data on the economic outlook. He might speak about the balance sheet as well, okay? So he's usually going to do that. These are some major banks, TD and Scotia. TD expecting to emphasize patience, stating that any more hikes this year will likely require some pickup in inflation. So in other words, inflation is important for the Federal Reserve, so mark that note. On the balance sheet, he will not front-end the Federal Open Meeting Committee and announce anything new, but repeat that the committee expects runoff could end later this year. Powell testifies before Congress and the just released monetary policy report, and he's going to speak about recent economic developments on Thursday as well and longer-term challenge. It's difficult to envision what more could be said over and above recent communications, such as publication of the FOMC minutes. But the latter appearance could freshen up his take on things compared to the arguably semi-stale minutes. Right, so in other words, it's fresh. Market always wants to know what's fresh, what's new, what's the latest thing. So Powell's going to be, seen through that lens of, revealing the latest things for him. Right, so this is the market in wait and see mode. It's just going to wait, okay? It's just waiting. What's Powell going to say? Do you think about it? People don't want to initiate new positions at this point in time because it's just too difficult to initiate positions at this time. So the market is pausing and waiting, and that pause will carry on. Also, you have the Canadian CPI data out on Wednesday. Now, Canada's an interesting point because they're kind of maintaining quite a strong hawkish stance, really, compared to other central banks. So that'll be interesting to see what the CPI data is out for Canada. So you've got 0.2% month-on-month reading. So that'll be interesting. We've got some other high-tier data out for Canada as well coming up. We now look at the charts, okay? So now we want to develop a bias for certain currencies. Okay, now, the difficult thing with developing a bias for certain currencies is, okay, if you had to choose a pair, what bias would you have for certain currencies? How would you play this, knowing what you know about the markets now? What would you be looking at trading going into these events? Tell me if you can. What's a strong currency we got is the pound. Okay, it's the pound. Do we have a weak currency? We don't really have a weak currency. We've got a strong currency, the pound, but because we've gone into that event, this is not a time to trade the pound. So this is one of those situations where you're waiting and seeing. And what you want to do, you want to wait and see what what Jerome Powell says to Congress. That's going to be the next market moving situation. So let's go and look at a chart in anticipation to see some key levels ahead of that meeting, okay? So let's have a look. So that's the pound. I shorted it from up here. It's just buzzing around there. I expect more downside from the pound. Let's look at the dollar yen. Dollar yen, dollar yen. That's a key pair to be trading for the US dollar. Put my template on. Now. Right, we can see the dollar yen has been moving up in the 200 moving average, traded into it, rejected, into it, rejected, into it, closed above. We're seeing some sell-off now down to the 100 exponential moving average, so just at a technical point. So the technical points that we have here on the daily chart, If we get and stay above the 100, the 200 moving average, we're looking at more upside. If we get and stay below the 100 moving exponential moving average, we're looking for more downside. First target down here at the 50 exponential moving average. Looking on the 1 hour chart, we can see that price has generally been moving up. It's a slight uptrend. You can see that the optimism about the US-China trade war has meant that there's been a general bid in the US dollar against the Japanese yen. There's a slight pausing today. And so you've got to hold those two events in focus, the US-China trade deal and Jerome Powell speaking later. Now, if Jerome Powell is more hawkish, we're likely to see some dollar strength. If he's more bearish, we're going to see some dollar weakness. The key places to define limit risk, you've got the 200, 200, 200, 100, 100 exponential moving average. So a key place to define a limit risk will be this 200 exponential moving average on the hourly chart. So going into Jerome Powell, a key place, this is just me giving you a hand today because it's quite tricky today, is having a look how price responds around this 200 exponential moving average. If price gets below and stays below, you can see how important that will be, because if price gets and stays below, that will be the first time since the 1st of February. So price gets and stays below, it's the first time all month that price has been below the 200 exponential moving average. So I would use that as my line in the sand. So if look at what happens when Jerome Powell speaks, look how the market responds on the dollar yen chart. Look what the currency analysts are saying. Has he marked a shift? Is it a bearish shift? Is it a hawkish shift? And then use the 100, 200 exponential moving average to define and limit risk. So there's a good example. You know, the market is dynamic. I have neither a crystal ball nor an ability to bring the events to us. But the best way of trading this complicated scenario now is to wait. So we've looked ahead to see where a key market place to enter would be. So at least that's okay. Trib, I see you. Okay, thank you guys. So okay, looking at stronger currencies, US dollar strength. Trib, I'd wait to see what Jerome Powell says. Dieppe, Canadian dollar. We need to see what's happening with the oil market. See if the oil market recovers before looking at buying CAD. Buying pound US dollar, no, Trib, I'm personally not into buying pound US dollar at the moment. I need something different now. I bought pound US dollar. I'm not looking to buying it now because the extension is just we don't know how long that extension might be. It's not a foregone conclusion at this time. It just kicks the can down the road. So my bias is more bearish pound US dollar, even though pound has been the strongest in the day. What I've tried to explain to you, Tribuvan, is the reason the pound's been the strongest in the day is buying into that rumor that Theresa May is going to extend Article 50 or make sure a no-deal Brexit is off the table. That's what she said she'd do. That's what was reported she'd say she'd do. That's what's happened, and now the market's reassessing. It's that whole buy the rumor, sell the fact phenomena, okay? We've had the rumor, I've bought into the rumor, I've made the money, and now it's time to sell the fact from my perspective. I'm selling the fact and to see how the pound goes from here. So interesting times. I mean, even now the headlines are coming out on my Reuters feed. I've got Theresa May saying we'd only leave without a deal with consent of Parliament. So she's wanting you know, she's trying to reassure her own cabinet, because her own cabinet were going to walk out basically if the risk of a no deal got too high. And the hard thing for Theresa May is that was her negotiating point with the EU. Look, if you don't give us a deal, we're going to walk out. If you don't give us a deal, we're going to walk out with a no deal. And so that's been removed from her wallet, so to speak. She doesn't have that in her arsenal anymore. So we saw the strong currencies today. Yeah, Trib, great. I'm glad you got that. Good, super. Strong currencies today is the pound, and the weak currencies today we saw there isn't really anything that's worth putting as a weak currency today. We're in wait and see mode, and we're waiting for Jerome Powell to speak to Congress, and that may well provide new direction going into the markets. Remember to look at your risk, particularly with these bigger risk events. Never trade. You know, I recommend trading without leverage. or if you do use leverage, use it very, very carefully. It's one thing that really can destroy traders and limit your success in the market of making a good return and staying in the market for a long time. Then what we're going to be looking at now is an interesting question. This is our special topic, and really relevant for today, you see, because why does the FTSE 100 fall when the pound rises? Okay, why is that? Okay, so you can see, like, when the pound rises here, the pound falls, and vice versa. This blue line is the FTSE 100. Look, you can see as the FTSE 100 was rising on the back of the Brexit deal. Yeah, this was the Brexit when it was originally voted on. Okay, there was a huge drop in the pound. Okay, sterling fell from 1.50 down to about just above 1.30. Okay, this huge drop. Okay, that was in sterling. That's the yellow line is sterling. Okay, so you thought, well, if sterling is the UK's currency, surely the UK stock market would fall with it. So why is it that when sterling falls, the UK currency, why does the FTSE 100, which is the UK stock index, why does it rise? In fact, look, you can see the further the pound falls, the more the FTSE 100 rises. It almost seems to be good news for UK equity markets when the pound falls. Well, that is quite simply because it is. When the pound falls, that is actually good news for the FTSE 100, and it'll be dead easy for you once I explain why. And this is a good thing for you to remember, particularly if you're looking at trading the pound, US dollar. Have a little quick look at the UK FTSE 100. It can give you a clue as to near-term direction of the pound. Now let's just copy that, and I'll put this in here. That's from an old. There we go. And this is the breakdown of the FTSE 100. Okay, so the FTSE 100 is made up of 100 of the UK's best companies. Okay, and they constitute the FTSE 100. Now, if you look at this ring, look at this graph here. The inner ring is how many of these FTSE 100 companies have their headquarters within London. And the answer is 97% of these companies have their headquarters within London, which is what you'd expect UK companies. Okay. Now, where do most of these companies do their business? Well, the most of these companies do their business outside of the UK. Okay, so only 28.9% of their business is done within the UK. Okay, so the rest of it, look, a large portion is done in the US. So if the pound is losing value against the dollar, that means a lot of companies are earning their money in dollars. So when UK companies are earning their money in dollars, when they bring those dollars back to the UK and convert them into pounds, guess what? They're actually getting more pounds. So the weakness of the pound, particularly against the US dollar, has meant that many companies are effectively getting a pay rise. Now, many of you will be aware of this. If you get paid in a different currency, the exchange rate fluctuates from time to time, doesn't it? And you think, oh, okay, this month I got paid X amount of dollars, and by the time I convert that into pounds or whichever local currency you're in, it may, some weeks, some months it's more, some months it's less. Well, this is what happened with the UK companies. When they're paid mainly in dollars, when the pound was losing value against the dollar, they effectively have a pay rise. So that is why you have the FTSE 100 falling when the pound rises, and it's why you have the FTSE 100 rising when the pound falls. So today, just to test your knowledge, given the fact that the pound was rising, what would we expect the FTSE 100 to be doing? Would we expect the FTSE 100 to be falling or rising? What do you think, guys? What would we expect? If the pound is falling, what would we expect the FTSE 100 to do? Yes, if the pound is rising, we expect the FTSE 100 to be falling. That's correct. Okay. And remember, when we came on to this webinar, remember I said that the FTSE 100 was around -1%. Okay. And that was when the pound was quite a lot higher. The pound has fallen now to 1.3180, and guess what? The FTSE 100 is now, I'm looking at my Bloomberg terminal, and it's -0.78%. Okay, so it's pulled off those lows, which is what you'd expect as the pound has regained a little bit of strength. Okay. That's what we want. We want, yeah, when the pound is rising, we have a falling FTSE. Okay, that's good work, guys. Just take a screenshot if you want. A screenshot of these. You can have a look at it in your own time. Get that relationship in your head. It can be helpful when you're trading the pound. And yeah, it's good. Remember, risk on, risk off markets. I want to share this with you because I'm just going to plug my power. Just going to plug my power in. Okay, I think you're with me. Okay, guys, are you still with me? I just plugged my power supply in. I was running low on battery. Can you still hear me okay? Can someone just type in the questions so I know that you're still there? Oh, great, Dan. Thank you, guys. Yeah, so remember, risk on, risk off markets. We may go into either a risk on or a risk off time, so just to be aware of that. Risk on markets appreciate during risk on time, so equities. That's why I said the Hang Seng Index going up +5% was a good indication of a risk on market. Didn't really follow through yesterday, so caution is advised. Higher yielding currencies like Australian dollar, New Zealand dollar, Canadian dollar appreciate, and commodities tend to appreciate, you know, oil and metals, okay? Conversely, risk-off markets, if you go to risk-off situation, we're going to expect to see the pound and the Swiss franc appreciate and the Australian, New Zealand dollar and Canadian dollar depreciate. Just wanted to go through that with you a few times ago. The more I go over it, the more likely you are to remember it, and it'll get stuck in your heads. Good. Okay, so just going to go through the one-on-one coaching that we do here. This one-on-one coaching is so if you're looking at depositing any money with HYCM, you need to be aware of these offers, because if you deposit $1,500, you get a 1-hour coaching session with myself, and I can help resolve personal trading queries. So if you've got a particular problem or issue you're struggling with, we can look at addressing that in the 1-hour coaching session. This is more of coaching with myself. If you deposit $3,000, you get the coaching session plus trading review. That can be really useful, because if you have the session and then have that session reviewed, it can give you a sense of progress and just can help keep you on course. There was a guy who I did this with before Christmas, and I know he found that, you know, really helpful. And then finally, there's the $10,000 deposit, which is the other two plus 1 week's VIP support. So that the idea of that is you would send me emails about trading setups that you were looking at, and I could sort of, you know, give you some guidance on like, oh, okay, you know, you might want to avoid that currency pair at that time because of X, or have you considered this factor? So I can get alongside you and just sort of, you know, guide and direct as that's going on. We'll just have a quick look at the pounds now before we say goodbye, because this has been a really good lesson in buying the rumor, selling the fact. See the pound yen, you can see, look, it's just finding support against that 100 exponential moving average. See, buyers will be leaning against that level there. Stop underneath. So if there's a break, it will be a stop run on the break. Looking at the pound, let's have a look. Dun, dun, dun. Yeah, we can see, look, and this was just a very obvious place to take profit. So we bought the rumor, head into the 100 exponential moving average. Traders like myself have taken profit. So we bought the rumor, and now it's a sell the fact scenario. So you can see that that's sold. You got a bearish engulfing bar from the top of that level. We also saw that was a resistance 1 pivot point on the hourly chart. So looking at targets down below, like an obvious target would be the top of this range here. We could also look at a return, a return to that top of that range as the first port of call, and then 200 exponential moving average on a break of that. Okay, guys. Well, thank you very much for coming to this. Oh no, yeah, good question. The one-on-one is the one-on-one. I'll just show you. The one-on-one session is not over the phone. I do it over Skype. Okay, that is how I do it, and it works well over Skype. Okay. Yeah, does that make sense? Yeah, just do it over Skype, and then I can see you, you can see me, I can see your screen. That's how it works. What about Euro, US dollar? Again, that will really be dependent on what happens with Jerome Powell coming later. We haven't got time to look at that technically now, but if you look at the moving averages and you look at key pivot points and you see how the market responds to what Jerome Powell says later. Okay, guys, it's been a pleasure. I've really enjoyed today. It's been a different session, but I hope it's been helpful in seeing how the market responds. The market's a bit like the sea, isn't it? They say the sea's never the same twice. Sometimes it's that color, sometimes it's rough, sometimes it's smooth. And today we've seen the market in a quite unique situation, waiting and seeing, and also playing out that buying the rumor, sell the fact trade, as we've been on the webinar. Okay, guys, have a really good week. Don't forget to come back next week. We do the FX FX week ahead on Monday, 12:30 GMT, and the online trading workshop same time next week. I hope you will trade safely. Hope you will have a good time, and I look forward to being in touch shortly. Have a good week, guys. Goodbye. Yeah, thank you too, Trib. Thanks, Daniel. Cheers now. Bye, guys. Jay, I've just seen your questions yet. I'm not sure of your question there. I think if you're looking about free margin, have a check with your account manager. Yeah, cheers. Yeah. Take care now. Bye.